Look at the market right now, absolutely lackluster, trading at the day's low. The broad market stock, the large caps, nothing really seemed to be working right now, at least in the medium term. After this consolidation, have the volumes been low? What exactly is the strategy HNI investors and retail investors should adopt? I have Kunj Bansal, market veteran, on my show today. Kunj, a very good afternoon. How are you analyzing the investment climate right now, especially in light of the the domestic flows actually coming down very sharply? Historically, we have seen retail panics and sells at the bottom. Will you read that side of the Amphi data which came out, or will you read that the SIP flows at almost 8,300 crore are at all-time high per month? Which side of the argument would you read?
Yeah, so I'll answer your question in three parts. First, and one, the market. Now, market. Let's keep in mind that where are we? Let's put some numbers and in perspective. We are up, or till about last week of November, we were up almost 10% from the October lows, which were achieved after the finance minister's announcement of tax rate cut. So from 11,100 Nifty, we almost moved up one way 10%, excuse me, to 12,100. As I said, 10% in a period of about 2 months. Now, after that, if market is taking a breather or consolidating or correcting, whichever way we want to look at it, I don't think there is anything wrong with it or there is anything bad. In fact, if at all, it's good, because the consolidation / correction is giving an opportunity for people to come back in the market. So that's one part as far as the market current status and the moment is concerned. Coming to the flows, I think one very good thing has happened over the last few years, that Indian investor finally seems to have matured. And if we leave aside the last 1 month, I mean the yesterday's data which came for the last month, as you yourself said, SIP inflows continue to be there. There is absolutely no reduction in that. In fact, if at all, they are going up. And if the non-SIP inflows, the one-time inflows have reduced, they have reduced at the peak of the market, which is very good. I think if we look at it from the perspective that is asset allocation being followed, and as a result have investors withdrawn money at the peak of the market when their equity allocation went up more than the what they would have probably modeled 6 months or 1 year ago, it's a healthy sign, which gives us confidence that if market gives them the correction, they will come back also. So I don't think there is anything to be concerned. As I said, if at all, it's a sign of the maturity. Whether the correction will come or not for these investors to come back in the market, or whether whatever money they have withdrawn, assuming that if they have withdrawn it from the large cap schemes, they want to put it into the mid cap and small cap schemes, then the market is still offering that correction. So that's the strategy that should be used, and that's the way I think I would like to view the current market, as well as the news flow and the recent money flow, that numbers that have come in from the mutual funds.
How long do you think the winter for small cap will last? I will play Chris Wood bite also gradually, but we went to ask him. Nikunj and I were chatting with him, and he said that mid cap and small cap will only start moving when they sense economic recovery ahead, which doesn't seem to be in sight, at least 3-4 quarters far out. What's your own sense of the long, almost 2-year winter for small caps?
So, while we do talk, and I myself just now talked in terms of large cap, mid cap and small cap, if we change our discussions slightly from the market cap to the fact of the performing industries and performing companies, and non-performing industries and non-performing companies, I think that the perspective will change. Of course, what has happened is that the last 2.5 year slowdown, and any slowdown for that matter, always affects the smaller businesses much more than the larger businesses, which is obvious. The larger businesses have far more cushion of absorbing such shocks. In fact, they have become larger by having absorbed such shocks in the past in the various cycles that they would have seen in their existence of 25-30 years or even longer, whereas the smaller businesses have only seen 1 or 2 cycles of such slowdown. So that's one part. Within smaller and mid cap businesses also, if we look at some of the sectors or some of the businesses, I don't think the wherever the numbers have come in or wherever the companies or the sectors have been able to withstand the pressures. Now let me take some examples so that what I am saying comes out clearly, makes things more clearly. Let's take the biggest sector of the market, the BFSI, and within BFSI let's take NBFC. Now there are number of NBFCs which are in the mid and small caps which have done phenomenally well. First in terms of financial performance, and as a result in their share price performance, and obviously there are other NBFCs which have fallen by the wayside because they could not withstand the pressures which affected them in the last 1.5 years, last 6 quarters post IL&FS crisis. So again, to make it more clear, I am taking some names and these are not investment recommendations. Moving on from the larger cap NBFCs like Bajaj Finance, which as I said maybe we can keep aside, there are companies like Cholamandalam. There are companies like Arman Financial, there are companies like Mass Financial, now there are companies like Aavas, which is more of an housing finance company. So these are the companies which have clearly withstood the pressure of the economic slowdown by the management strategies, by the business models, by way of proactive attempts that they made to overcome the pressures of the industry. And as a result, they have been rewarded. So as I said, if we move aside from the large and mid cap, market cap oriented discussion to performing companies, that fact probably doesn't come out as much as if we talk about market cap. Still, staying with market cap, obviously when we see the sharp growth coming back in the economy, GDP growth numbers starting to recover back to 6.5, maybe 7, that is where we will see a broader participation coming in. And that probably could take time. Right now there are no symbols that are looking on the horizon. In fact, extending the discussion further from NBFCs, if we look at some of the auto ancillaries, again auto ancillaries also have largely two different packs. There are one which have clearly fallen by the wayside and there are the others which have continued to do well. So that's where the current state of market is.
So there's another important event of the day, and that is the Yes Bank board meet to raise funds. Varun is there. He's been working the phones as well as looking at data. Varun, do you think investors will say yes for the proposal, Yes Bank?
Well, it all boils down to whether they'll actually get a proposal from any of the investors or not. I think the majority of the street is hoping for the fundraise to come through today, and it does seem like something's going to come through. But just looking at the history of this bank and what's happened over the last 2 months, there have been numerous promises, but there's been absolutely zero delivery as far as the capital raise goes. So now out of the 2 billion, 1.2 billion has anyways been voided, as Irvin Singh Brech will be denied, and the bank is poised to reject his bid. So that leaves around 800 million still open, and we're very hopeful that the funds will come through. If you just look at the stock price right now, I think the street is a bit concerned or skeptical as to exactly what will happen. That being said, you heard Ravikant earlier as well. If the bank does not get this money, then the CET will not be able to fall in line with the regulatory norms, which currently stands at 11%. 2 billion was going to get them to around 12-13%. So, half of that will just about cover it for the next 2-3 quarters. And the watch list and all is going to keep growing, and so are the slippages. So it's paramount that the fundraise comes in today. If it does not, we're going to have some serious pressure on this counter.
Sure, we would be watching for that developing story very closely. But Kunj, not to take any recommendation on the stock, but how are you observing this entire saga of Yes Bank unfold, purely as a market observer and what they've gone through?
Yeah, so frankly, it's unfortunate, and as you rightly said, not to give any investment recommendation. If we look at the developments over the last few months, obviously initially the bank did go through a lot of bad time led by the news and financial numbers and management change, and the stock price falling by actually 90%. Now, after that, there came a hope that yes, some investors will be willing to put in money, the bank will be able to raise some money, and which is where we saw the stock price stabilizing, in fact recovery almost 100% from the lows. If we say from the peak, it's still 80-85% down. Now at that point of time, it was very important that bank should have and would have stood up to whatever the news flow was. Unfortunately, as you yourself and your colleague was reporting, that hasn't happened. So there were names of all and sundry, if you recall, which name wasn't left to come in, and it became more a story of Sher and Bhedia, which we popularly know. that who this person will invest, that brand will invest, then that brand will invest, and which led to some investor interest coming back in the market. Now that was followed up finally with the board meeting last week, and in which one name came in which obviously hasn't been liked by the market. And now there are news that in today's board meeting, the board will again consider and drop that name. So I don't know. I am nobody to comment on the competency level of the members of the board of Yes Bank, which are highly qualified professionals. When they accepted that name last week, what has changed in 1 week for them to drop this name? The market reaction? Could it not have been gauged earlier? Could some informal feedback not have been obtained earlier? Whatever is the background of the investor whom you are dropping now was not known. So, and also the fact that as a result the bank doesn't have any other investor, and that's why it chose to accept that name. So I think now for the market to give confidence back to the bank will only happen when the market sees actual money coming in on the table and the names of the investors who have put in that money. Till then, I don't think market is now going to give a benefit of doubt. That's my personal view. I could of course be wrong. So as I said, till then market is not going to give benefit of doubt to the bank now.
Which is in focus is insurance, not only because local funds have been buying insurance stocks last couple of weeks and months, but also because ET reports that government could hike FDI limited insurance from 49 to 74%. My colleague is here who's looked at that story very closely. Soumya?
With this November data, the insurance space is back in focus and is back in limelight with the growth reported in the APE terms. Well, within the private sector, there was a good growth of over 29%, and even the mid-sized players were raking up share. Not just this, really strong growth came in by LIC, which reported a good growth of over 110%. Well, this was mainly led by one-offs. Now, talking about these one-offs, but they were driven by the fact that the company is withdrawing and taking off some of its insurance products off the shelf. And now with this, generally what the distributors do is they try to push forward these discontinued products to the customers as they are taking it off the shelf. And this entire dynamics helps the companies, especially the insurance companies, when it comes to their monthly data. Not just this, given the fact within the private space also we did see mid-sized insurance companies reporting good growth. November has turned out well. Let's see if this growth momentum continues in the coming months as well, and we'll be closely watching and tracking out the entire insurance data as and when it comes out.
Kunj, which are the insurance stocks you like as in business models? Is it the general insurance, is it the life insurance or health insurance, and what's your call on the space?
So let me start with the last part of your question first, the call on the space. In fact, let me put that in perspective with the current market also. So as market, we were discussing a while ago that we are at almost life high, especially when large cap indices are concerned. Of course, there has been some leadership rotation in sectors and companies in the last 2 months, last 10% part of the rally, but before that it was largely BFSI and consumers. Now in this market, if one were to invest, it is obviously difficult that at a life high in the market, and the valuation, especially in large cap, which anyway had been expensive, with the market rising further, have become more expensive. Where does one invest? So in my view, in the current market context and in the current economic context also, wherein we are going through a slowdown phase, insurance sector does indeed emerge as a good investment opportunity. For the reasons that despite the slowdown, we are seeing anywhere around 20 to 30% kind of growth rates in different parameters, whichever we look at, VNB, the premium or the profitability of various companies in the last almost 5-6 quarters. And that is likely to sustain, given the way finally slowly the penetration, the low penetration that Indian market has in insurance has been increasing. So that's one part. Now, because of these growth numbers, which are not being reported by other sectors, this obviously becomes an investment worthy space. The fact be well known and recalled that yes, stocks have moved up, have performed, because they were probably one of the fewer opportunities left in the market, and one can always keep discussing or arguing about valuations, whether they are cheaper or not. But in my view, if one takes a medium-term view of 3 to 4 years, the stocks can easily give a 15 to 20% annualized return from here also, given the way the growth rate is likely to continue to be there.
Right.
Moving on, I don't think there is much to be chosen from life and general and health. First of all, in exclusively health, there is no listed insurance company. So as a pure health, I don't think one can choose. Pure general, there is only one insurance company, ICICI Lombard, which is doing very well. So one can easily invest, and so is the case with some of the other life insurance companies also. So making a mix of 2, 3, 4 top insurance companies expected to give a good return over the medium term, I would say, as an investment strategy.
Kunj, stay with us. Kunj, very quickly, I want to understand, not sure whether you observed or not, but 2 NBFCs have acquired microfinance companies in last 1 week. Credit Access Grameen yesterday, or the last week, around a good 800 crore worth of MFI. Even Centrum has acquired, one small MFI company. Any view why NBFCs are having such high degree of interest in MFI business that they are landing up acquiring companies?
In my view, I think clearly the expectation is that microfinance as a business, although it has its own challenges, it has its own hiccups, and has been having hiccups over the last 2-3 years particularly. As a business, I think, and as an opportunity, will continue to grow. It will continue to offer good growth opportunities. And now in the last 1 year, when NBFCs are having challenges of 2 kinds. Some of them are having enough liquidity but are not willing to lend because they are not wanting to compromise on the quality of assets. For them, it has become very important that they look for newer growth opportunities. And those kind of NBFCs will obviously be looking at some of the good quality microfinance companies if they can find to buy out, because that straight away adds to their business growth. So I think that's the reason. As I said, the microfinance business in India does come with its challenges and risks. It's not that easy a business to build up. Already, because of the over competition coming in, multiple multiple microfinance companies coming in, a lot of borrowers are being over serviced and have got over leveraged. So that does put a risk of asset quality. But still, as I said, in the overall NBFC space, for those NBFCs which have money, which do not have problem of raising resources, but are not lending because they are not willing to compromise on the asset quality, for them it's very important to look at the newer businesses, and that's the reason they are going in for these kind of acquisitions.
Thanks very much for joining us, Kunj, today on the show. Always wonderful getting your thoughts on the markets.